From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a big beat for Apple and another record despite supply chain issues. We will break down the iPhone maker's quarterly report. Plus, Robinhood results also out just about 1 year on from the GameStop fiasco to the day. What tussles with regulators lie ahead for the trading platform? We will discuss. And breaking up, not so hard to do for Softbank, on the verge of losing another top executive. COO Marcelo Claure in talks to split after asking for $1 billion in compensation. We'll get to that in a moment, but first let's look at the markets. Obviously, we're watching Apple. Our Ed Ludlow here looking at the big picture too. Ed, give us a snapshot.
Yeah, well, we will get to Apple, and spoiler, they had a great fiscal first quarter, but we've got to look at the broader markets first. NASDAQ 100 down 1.2% at the close, that tech-heavy index. But again, we swung from gains earlier in the session to losses, and that's why I bring up Apple, because is this big beat by Apple going to change the psychology of the market that's been so focused on the outlook for rates and what will happen to those stretch valuation tech stocks? NYSE FANG Plus Index, that basket of mega-cap tech stocks and Chinese ADRs also under pressure. Big reason, Tesla down 11%, $108 billion of market cap shed, and its biggest post-earnings drop since July of 2019. Semiconductors continue to be under pain, down almost 5%. And risk-off sentiment in the market, Bloomberg Galaxy Crypto Index, which is largely Bitcoin and Ethereum with some other larger market value tokens also selling off. Let's get to those after hours earnings with Robinhood. Robinhood having a tough time of it in the final quarter of 2021. The equities trading revenue down 35%, and so the top line comes in at $362.7 million of sales, below expectations. I heard you talk about those meme stocks, but you know, November, December of last year, there was volatility, so it's really interesting to see Robinhood struggling there in after hours. Then let's think about Apple here, because it was a big beat on the top line. This is record revenue, almost $124 billion of revenue for Apple, way above expectations. Strength in those new products they're talking about. Of course, the Christmas period, the holiday period is Apple's fiscal first quarter. iPhone 13 comes out. Looks like there was strength. You and I were chatting a moment ago before we came on air. Why was the iPad not as strong? That's something to listen for in the call. But did Apple circumvent supply chain issues? It seems so, Emily.
They certainly did. Ed Ludlow, thank you. I want to stick with Apple and bring in Forrester analyst Julie Ask. Julie, got to ask you about this big beat. What do you make of it, given the chip crisis and the supply issues that everyone else seems to be dealing with?
Yeah, you know, I give credit to Apple. They continue to stun despite the chip shortage and the supply chain issues. What we see from our side is consumer demand for the kind of products they sell is still very strong. We saw 19% of consumers buy a new laptop in the past 6 months. We see 76% of consumers using streaming audio, another 50% with streaming video. The demand is strong. Consumers expect to be home and expect to ebb in and out of office environments, gyms, and so forth. Demand for Apple products continues to be strong. Of the folks who bought a smartphone in the past 6 months, we show 47% in the US bought an iPhone. And we show consumer demand for bundles to be strong. They like to save money. It takes away the complexity of choosing. So Apple's doing a lot of things right when we look at consumer demand today.
We saw the iPad really make a resurgence through the pandemic. What do you make of the relative weakness we're seeing in this quarter? Does it have to do with kids going back to school and us sort of moving into a new phase of the pandemic?
Yeah, it could. I think you're right. It could be a new phase of the pandemic. I mean, certainly it's not become the laptop replacement that some thought it would be. It certainly is a tool for those who are creative, those who are on the go. And I certainly think the strength of the media offering helps the iPad. But I think, one of the things we look at too is just, when we look at the Christmas season, we look at things like, 3G came around. A lot of consumers were forced to upgrade their smartphones. And I think we could also just be seeing a question of consumers' priorities during the holiday quarter rather than slack demand for a new product overall.
So actually, we are getting some headlines from the call right now, and Tim Cook saying that iPad revenues were lower due to supply constraints. So clearly, this is something that Apple is still feeling, and it's impacting the iPad specifically. What do you make of that?
Yeah, I don't know if there's more analysis that I can offer. Certainly it's tough. I went on Apple's website yesterday. I looked at the iPad Pro at the upper end of the line. I looked at AirPods. I looked at smartphones. I looked at smartwatches. There weren't many products that I couldn't get within inside of a week. But certainly, from the stories that I've read, it does seem like the supply chain, impacted their ability to deliver to consumers in the last quarter of last year.
So what else are you watching here? China in particular seems to be really strong. In fact, every region was strong, except we saw relative weakness in Japan. But the iPhone, once again, gaining that top spot in China after 6 years.
Yeah, so I think it's good to say. I mean, certainly, the iPhone or iOS isn't the dominant operating system in the China, but certainly Huawei has struggled. Xiaomi hasn't, come forth and brought out a killer product that everyone wants. So I think it's a good sign. Overall, I think the other thing is, Emily, as we look forward, it's not just about the smartphone or just about the tablet or about the watch. It's about the ecosystem, including all of the services that go around that. And there isn't really a company that has a stronger, more cohesive experience offering that works throughout an ecosystem like Apple does. And so the more devices consumers buy, the more services they buy or service bundles they buy, the more likely they also are to be attracted to the Apple ecosystem. I'd say the second thing that I look at is the biggest hype or the biggest buzzword of the past 4 to 6 months in this industry has been the metaverse. And so I think as we also look forward and we think about, well, what is it going to take to create experiences? What kind of a headset? What kind of an ecosystem? Who has developers? Who has services? I think it's going to be fun to watch Apple on that dimension as well.
Tim Cook saying supply constraints were worse in Q1 than Q4, which certainly makes you wonder, is it going to continue to get worse? Is there no relief ahead? Moved on to talking about the iPhone now on the call. Best lineup ever, he says, the Mac setting a record as well. But I want to move on to services and, Apple TV Plus, and of course, this business that Tim Cook himself really bet on so many years ago and has, almost surpassed, just about everyone's expectations. Is there anything in particular on the services side that you're watching, especially over the next year?
Probably a few things. So one, certainly there's a difference between consumers using an audio service or using a video service versus paying for it. So one, we're seeing more consumers pay. The second thing is we're seeing consumers drawn towards the bundles, like the bundle that Apple offers that has fitness and music and video in it. They're looking for deals. Top of the list, they want to save money. Second on the list, they want something that's easy. Third on the list, they want to feel like they're getting a deal. And so the breadth of the offering that Apple offers plays heavily in their favor as well. And when we look at they're generating this, like 19, almost 20% of their revenue from services, and of an Apple number, it's a very, very big number.
And obviously, they do need people to keep buying that hardware to take advantage of those services. Tim Cook highlighting the new chips, Apple-designed chips, saying that's one of the reasons we're seeing some of these boosts across the board in hardware. Okay, we're going to continue to follow these headlines. Julie Osk of Forrester, as always, appreciate your instant analysis. Thank you for joining us. I want to stick with Apple. The company is developing a feature that will let iPhones accept payments with just a tap of the credit card. Currently, merchants need to use terminals that plug in or communicate with the iPhone via Bluetooth. Bloomberg has learned Apple has been working on the feature since 2020 when the company bought a Canadian startup developing that technology. Coming up, it's been a year since the GameStop chaos. We are tracking Robinhood results as well and reflecting on the meme stock phenomenon that put the trading platform in the hot seat. This is Bloomberg. A year ago this week, thousands of retail investors went all in on a few failing stocks, including GameStop and AMC, following advice from the Reddit thread Wall Street Bets. Shares went soaring and upended many hedge funds' plans. This also put Robinhood, of course, in the spotlight and at the center of SEC scrutiny. I want to talk about all this and more with David Chase. He is the CEO of the law firm David R. Chase and a former SEC prosecutor. And before we dive in, David, I'm looking at Robinhood results now. The shares are plunging after hours. They missed on revenue. They missed on monthly active users. And there still are certainly questions surrounding some of the regulatory issues here. What do you make of Robinhood a year later after the mania that was GameStop?
Yeah, I would just say how things have changed in the last period of time since it filed its S1 and went public, with all of the anticipation about its revenues and profitability. Clearly the market has punished Robinhood stock given its performance to date, and certainly apparently continues even after the announcement today of earnings. It creates a situation where a company, in the financial services industry, can deal with regulatory problems, or certainly it makes it easier to do so when revenues are good and things are going well for the company and it's profitable and the market is, rewarding it. Here, though, you've got a tremendous decline in stock price as the volume of activity in these meme stocks have dwindled. I think your prior host indicated that revenue equities trading was down 35% or so. And so with that decline in trading activity, you get the consequent decline in revenues. But also, the regulatory problems of Robinhood apparently have not gone away. There is still apparently an intense SEC interest in this whole notion of gamification of the markets generally, I think including particularly Robinhood's role in that. You still have ongoing class action litigation with respect to Robinhood's decision to restrict trading during the meme stock trading frenzy while it was going full force. In fact, just I think in the last week or two, an individual investor won an award against Robinhood in a FINRA arbitration, only for 40,000, but it potentially may be significant and an indication of things to come based upon an arbitrator or arbitration panel's finding that it improperly or wrongfully, evidently, restricted his ability to trade.
Right.
So, for example, also payment of order flow, which Robinhood has relied upon as a source of revenues, although less over time, is subject to continued regulatory and perhaps even congressional scrutiny. So even though the stock price has gone down and things are tough financially for the company, the regulatory landscape has not changed, and perhaps is perhaps even getting a bit worse.
Meantime, Robinhood CEO on the call talking about new products, and they are launching new products little by little. They want to launch fully paid lending in the first half of the year. They intend to add more crypto services to the platform. Talk to us a little bit about the nuances of regulating a trading platform that is itself also a publicly traded company and the target of retail investors.
Yeah, it gets complicated real fast. For example, the move to expand further into crypto, may be important for the company to generate revenues to make up, for example, for the loss of equity trading and volumes. But that will inevitably bring, its own intense scrutiny from the SEC. Gensler, the head of the SEC, in recent comments has made clear his view that, these cryptocurrencies and digital assets, depending upon the particular facts and circumstances, can be securities and should be subject to SEC regulation. So you have that as an overlay on the trading platform, of a publicly traded company that has disclosure obligations given its reporting requirements. And so like I said, it becomes complicated very, very fast. Robinhood will have to continue to make periodic filings discussing its operations, disclosing material litigation that potentially could impact its business and stock price. It is running as a platform which is going to be, particularly if they advance further into crypto, I think,
right.
Trending into new territory for sure.
Quickly, obviously, this retail investor phenomenon is not going away, and it's not just affecting Robinhood. More broadly, how big a task does the SEC have ahead, when dealing with, this avalanche of individual investors who want a say?
Yeah, I mean, this is the big issue, and the SEC has a job to one of its main goals is investor protection, but it also has to balance that against the need to have fair and efficient markets. And so, that delicate balance between protecting the individual investor and providing liquidity and efficiency, and also, allowing financial services to conduct business and conduct it profitably, kind of a light type of touch for regulation is also important. So that all has to be sorted out.
All right. David Chase, lots of potential flashpoints to watch for. CEO of the law firm David Chase, former SEC prosecutor. Thanks much. Meantime, another story we're watching, Supreme Court Justice Stephen Breyer made it official that he will retire this summer. The 83-year-old justice joined the president at the White House, who praised him for his years of service and promised he'd have a historic nominee by the end of February.
While I've been studying candidates' backgrounds and writings, I've made no decision except one. The person I will nominate will be someone with extraordinary qualifications, character, experience, and integrity. And that person will be the first Black woman ever nominated to the United States Supreme Court.
Silicon Valley watching the nomination closely. Justice Breyer had a strong background in antitrust. That means the court could be less likely to take up those types of cases depending who the nominee is. Coming up, Intel plunges on the back of fourth quarter results. Investors feeling jittery about CEO Pat Gelsinger's ambitious plans to turn the chipmaker around, including a new $20 billion manufacturing hub in Ohio. Will it pay off? And when? We'll talk to him next. This is Bloomberg. NASA has announced it selected 12 companies to provide launch services, including Virgin Orbit, Blue Origin, SpaceX, and others. Virgin shares rising on the deal, valued at up to $300 million. But that $300 million will be split across all companies in an effort to foster a growing U.S. commercial launch market. And moving on to chips, I caught up with Intel CEO Pat Gelsinger with my colleague Guy Johnson a day after the company reported fourth quarter results. I asked about concerns tied to how much Intel is spending, including another potential $20 billion hub for a new factory in Ohio. How guaranteed is the return? Take a listen.
We feel that this overall industry, expected to double by 2030 from $500 billion today to $1 trillion. Most of that is leading edge technology, which Intel's only one of 3 companies on the planet that's able to build at that scale. So we feel very strong that the demand signals for the long term are going to make these great investments. We also have a period that we had underinvested in capacity, and that's some of the supply limitations. What I wouldn't do to have more fab capacity today. So taking that together, this is exactly the plan that we've laid out. We're going to invest aggressively in our capital build out. And last week's announcements, Emily, of the Silicon Heartland, oh my gosh, the president, the governor, and I'll just tell you, even though it was in Ohio, every one of the Midwest states was so excited about us bringing this new capacity into the heartland of America, the Silicon Valley, the Silicon Forest, the Silicon Desert, and now the Silicon Heartland.
You do seem to have a direct line to the president these days, Pat. And on that note, Ford CEO Jim Farley told me this week that he sees no relief ahead when it comes to the chip crisis. Elon Musk on the Tesla call yesterday said they're going to continue to be chip limited going forward. What was your message to the president? I mean, what more can the government do to bring some of that relief?
Well, we believe, and I've been saying since early last year, that we see the shortage persisting into 23 and maybe even beyond. That said, we do think that it will see incremental improvements as we go through the year. But these are, still challenging times, and lots of these nodes that we have shortages on and different component shortages that we see, they're not going to go away overnight. So we think that we're going to be collectively fighting through these supply challenges as we go through the year. That said, hey, as a IDM, where I manufacture a lot of this myself, part of our strength of our business model is that we have more tools to be able to respond to these shortages than other companies do. And that was a big piece of our Q4 results.
Can I just take you back, though, to the point that Emily raised just a moment ago, and that is that you are investing huge amounts of money. The analyst community, the investment community looking at this, certainly saying that this is something you have to do. But what they're wondering, I think, is when do we start to see margins improving as you make this investment? When do we start to see a return coming back to more normal margins? When do you think that point is?
Yeah, we laid out a 5-year picture, Guy, on our last call, where we said, hey, 51 to 53 for a couple of years, and then they're going to start improving as we go to the back half of that 5-year period. And, I guided to 52%, right in the middle of that range for our Q1. So overall, I just say it's happening exactly like we planned it to be. We're seeing our revenue growth rates, these new business areas that I laid out. Everything's happening exactly like we planned it. And yeah, this is a big investment cycle for us as a company. It's the right one for Intel. It's a critical one for the industry and for our nation. And I'm proud of the fact that we're making these investments. And, at some point, the street is just going to see we are doing exactly what we say. We are a say-do company. And this leadership team, we are so fired up because we're seeing everything that we said, process leadership, product leadership, manufacturing capacity. We're doing it on track to deliver exactly what we said we would.
Is there, and I think this is one of the questions I think a lot of people are asking themselves, is there a possibility that you end up spending more than the opportunity to invest in the United States, in the heartland, as you say, is even greater, that Ohio could be even bigger? Do you think that actually the capital investment could be greater than even you're suggesting right now?
Well, when we announced the site, we said, hey, these are our first 2 fabs. We could see it go to 8+ fabs. So the initial $20 billion for 2 fabs. And we said this could be a $100 billion investment over the decade. And part of the site was a big area that we could just grow and expand in over time. And I'll tell you, the New Albany area of Ohio, just perfect. So warm embrace, support by the governor, by the local community, the entire Midwest. My objective, and if the CHIPS Act gets passed, our statement is we're going to go bigger and faster.
Intel CEO Pat Gelsinger there. You can catch the full interview at Bloomberg.com. Coming up, more Apple results. We've got the latest on the iPhone maker's record sales this quarter and what it signals about what's happening in the global supply chain. That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I want to get back to those Apple results. Our Ed Ludlow with us. And Ed, we're getting some critical insights from Tim Cook about what's happening in the supply chain. What is he saying?
Yeah, it's really interesting because it was such a blockbuster quarter. It was only a year ago we were kind of shocked by $100 billion of revenue in a quarter. Now they're pushing towards $125 billion to the quarter. Record retail sales during a pandemic is what Tim Cook is talking about. Services revenue outperforming. But listen to this, because supply chain, mixed picture.
We set all-time records for both developed and emerging markets and saw revenue growth across all of our product categories except for iPad, which we said would be supply constrained. As expected, in the aggregate, we experienced supply constraints that were higher than the September quarter.
So here's the thing. He's talking about strong year-on-year growth going into the fiscal second quarter, as in the quarter we're currently in. But we had that warning around supply chain. So, do me a favor. Ask Dan Ives this question. Dan, does the S&P 500 and NASDAQ 100 turn a corner now? Because Apple seems to have defied the odds of the supply chain, although it has impacted iPad that came in softer than expected. They seem to have pulled a rabbit out of a hat, Emily.
Absolutely, and certainly I find it interesting that it was worse in Q1 than Q4, though it sounds like on the call he's saying it looks like it could be getting better ahead. You got it. I think Dan can probably hear you. So let's get to that now and bring in Dan Ives of Wedbush Securities, who's also being listening in on this Apple call. Dan saying in his latest note, a major statement on iPhone services demand and Cupertino's ability to navigate a supply chain shortage in an almost Teflon-like fashion. Dan, I know you're listening in. Give us your headline takeaway about these supply issues and how Apple has managed them.
Look, I think Ed hit the most important piece in terms of the supply chain. As hard as the supply chain is to navigate, I mean, Apple's really doing it at the front of the line. And I'd say that the damage has been contained. If you look at this iPhone beat, this was not even on the radar to have a number like this, given the supply chain issues. And importantly, to Ed's question, supply chain improving in March. That's going to be a big focus tomorrow for every tech investor and really anyone in the food chain. That contrasts some of the fears that we're seeing, even from a Tesla and others, about supply chain issues lasting throughout all 2022. That's a key.
Okay, but why is Apple managing it so much better, or so it seems, than everybody else? I mean, we heard Elon Musk on the Tesla call yesterday saying that they're going to continue to be chip limited, and then we see this big move down in Tesla shares today.
Okay, about 9 months ago, Apple over-ordered anywhere from 20 to 30 million iPhones. They saw this happening, and they've continued to do that the last few quarters. And I think what's important here is that they're proactive. Of course, in China with Foxconn, they have a unique ability from a chip perspective in terms of sourcing, as well as the amount that Apple orders from an iPhone and just across their overall hardware ecosystem. They're at the front of the line. They ultimately get dibs when it comes to getting chips. That's why Cupertino continues to navigate it, but it's Cook. I mean, Cook's balancing act and what he's been able to do over this last year in the chip shortage is nothing short of remarkable.
Well, and of course, he was the COO of Apple for all those years, and his job was to master that supply chain. We're still listening in to him on the call. He says he believes they're gaining market share in iPhone. Looking ahead, certainly a little more optimistic than some of the other calls we've heard. What are the flashpoints for Apple going to continue to be, especially given that this is a global issue, even though Apple seems to be managing it better than everybody else?
Well, flashpoint, and Cook's hitting it on the call a little. He's not going to call it out specifically, but we think they've gained about 250 bips of share in China. And they were the number one smartphone maker in China, first time in 6 years. That's important because that's a key market for them. You look at overall supply chain, that's going to ebb and flow, but this is the strongest product cycle in a decade. And of course, in this market, we can talk about valuations all we want, but you look what's happened on services. I think that's worth 1.5 trillion. This is going to be what I believe almost a turnaround print for the tech sector. You combine this with what we saw from Microsoft. Key, in my opinion, to a reversal in tech.
What's your take on the iPad weakness? What do you think is happening there?
Supply chain constraint. If it's not for supply chain, they beat straight. And I think they called that out. We saw that from our checks. And I think that's something that will start to improve going into March and June. But of course, that is the one area that you saw from a pull forward from a work from home, unlike what you saw in services and iPhone, where that continues to plow ahead.
So let's talk about Tesla once again and that big 11% move down on the day. Obviously, I know you're very bullish on Elon Musk and what this company has been able to pull off, even in the midst of these supply chain issues. But at some point, they don't have a choice. They can only work with what they have. What is your outlook for Tesla in the year ahead as these issues persist?
Look, I ultimately think this is a company that could be up from a growth perspective, 70% from units. I think they had to be conservative coming out of the gates. The stock took it on the chin. I think ultimately an overreaction. But if you look at it right now, they don't have a demand issue, they have a supply issue. The most important news that I think many glossed over is in terms of the Austin build out. They're starting to manufacture cars with 4680, which is so important. And I think right now, by the end of this year, there'll be the 2 million run rate from unit perspective. We'd be buying the sell-off in terms on supply chain. I believe this is one. We're going to look at this, and they prove to be conservative.
That said, of course, Tesla has GM and Ford on its heels. There are all the very competitive EV makers in China. How do you think Tesla manages to stay ahead of the competition when consumers just have a lot more options if they want to buy an electric car?
Yeah, and there's an EV arms race, as you're talking about, not just GM, Ford, of course, VW in Europe, and then in China, NIO, Xpeng, and others. 3% automobiles today are EV. We think by 2025, that's 10% and 30% by 2030. You're going to have a lot of winners here. But the moat that Tesla has, besides just the brand and the model, the battery technology is the distribution. That's why Austin's so important in terms of the build out. That 4680, that's really what you put an asterisk around in terms of a big differentiator as we go in 2022.
Continuing to listen in to the Apple call, Cook saying that the supply chain is doing very well considering the shortages, doesn't see any need for fundamental changes to the supply chain. What are you going to be watching to see, in terms of how Apple, Tesla, that all of these companies manage this continuing issue?
I mean, just to show you, I probably got about 10 emails from institutional investors on those comments, because that is the linchpin. Apple is going to be the best barometer for the supply chain. Cook has the best purview. His viewpoint's key for the broader supply chain across technology. And what that basically means, if we're starting to see some improvement, then I think right now the street's baking in something that's going to last throughout 2022. Cook's saying not so fast. Very important in terms of broader tech as well as for Apple.
All right. Dan Ives, always appreciate your insights here.
Thank you.
Dan Ives of Wedbush Securities. Thank you. Another story we are following, Spotify down for a 5th day with the stock at its lowest level since May 2020. At the same time, the company announced it is removing the music of Neil Young. The singer raised concerns that Spotify's most popular podcaster, Joe Rogan, is spreading vaccine misinformation, writing in a letter to the company that they can, quote, have Rogan or Young, not both. Spotify struck a deal with Rogan in 2020 with more than $100 million. Coming up, he wanted $1 billion, but Softbank said no. The latest on the likely departure of COO Marcelo Claure and what's next. Next, this is Bloomberg. Softbank COO Marcelo Claure is in advanced negotiations to leave the company. This after clashes with founder Masayoshi Son over how much Claure is paid. Bloomberg has learned he wanted as much as $1 billion in compensation in recent months. For more on what his departure could mean, I'm joined by Bloomberg's executive editor of Global Tech, Tom Giles. So, Tom, what happened here? Obviously, we knew things weren't going well based on our own reporting.
Yeah, they could not come to terms. Marcelo Claure has played a significant role in a lot of things at SoftBank, a lot of key developments in SoftBank over the last several years. There was the turnaround with Sprint before they sold that. There was getting WeWork back on track, getting that company IPO'd. And remember what a nightmare that was for quite a long time, a real decline in the investment in terms of the value of that investment for SoftBank, one of its biggest. So he played a key role in that. He also has developed their Latin American investing fund up to about $8 billion. So he's played a significant role in some pretty big events and kind of bailing out SoftBank in some key ways. So there was compensation to the tune of $1 billion or more. There was also wanting a spinoff of the Latin American funds. Again, $8 billion, him wanting to have more independence there. That's where he's from. He's from Bolivia. He's got an affinity for the region, and really wanting to have that kind of more independence.
What do you make of yet another very high-profile executive leaving SoftBank, though? Obviously, Marcelo Claure, we all know he's a big personality. Nikesh Arora, his predecessor, also a big personality. And then, of course, Masayoshi Son. And then you also have these, folks in the Vision Fund, many partners who've left. What do you make of the revolving door?
There are some, as you said, very big personalities at SoftBank, and they're running lots of money. They're in charge of, they have a lot of responsibilities, and there's some big egos there. I don't think I'm seeing anything very controversial in that. When you get those people around the table together, you're inevitably going to have disagreements. And add Son to the mix, who's a very strong personality himself. And it's not an environment where, where they're sitting around singing Kumbaya. Strong personalities, lots of responsibility, managing lots of money, making big decisions, and they really haven't been able to, create an environment where these big personalities can sit around the table and get along well. It looks like it's the kind of thing that Masa is going to have to get his arms around. Eventually, you would have to think, if they're going to continue to make these monumental decisions, make these big investments in big companies and working to turn them around.
Any ideas what Clare is going to be up to next?
Well, I mean, he's been pushing for a long time for this, independent investment fund. Do you go and work for another one? Do you take some of those Latin American funds with you? The sense is he really wants to have his own shop. He really wants to be the guy in charge. And he wants to manage big amounts of money, possibly in Latin America. We don't know exactly where he's going to land. We do know he's planning to leave. We don't know exactly when that's going to happen. We understand there are still negotiations underway. What those negotiations look like, we're going to be working really hard to be the first to report it right here on Bloomberg.
All right, Tom Giles, our executive editor, thank you for the update. We'll be watching your reporting. Coming up, shares of Netflix jumping after Bill Ackman announced his huge new stake in the streaming giant, what it means as Netflix looks globally for new subscribers. That's next. This is Bloomberg. In the race to global streaming domination, despite the latest subscriber bump in the road, Netflix has invested more than $1 billion to create original Korean content with the hope of recreating the success of Squid Game. But as Bloomberg's Shirley Zhao reports, the ultimate goal is to win over the rest of Asia, including Thailand and Taiwan.
Netflix's Korean shows are hugely popular around the world nowadays, and the popularity of these shows helped Netflix generate $356 million in 2020, which is a huge increase from the level in 2019. Some of these shows include Kingdom, which is Netflix's first Korean original and remains one of Netflix's most popular shows around the world nowadays. And of course, we have Squid Game, which became Netflix's biggest show ever in just a month after its release in September. It generated about $900 million in value and attracted over 111 million viewers around the world. And then there is Hellbound, which is also wildly popular. It figured in Netflix's top 10 show list in over 90 countries. Netflix actually started pretty small in Korea. There was a time back in 2016 when Netflix just entered Korea. Mainstream broadcasters are unwilling to license shows to Netflix, but at that time there were also many opportunities. For example, mainstream broadcasters were bound by a lot of conventional taboos and rules on what can be shown and what cannot be shown on TV. So there were a lot of good scripts lying around in the market, and that created an opening for Netflix to zone in these scripts. And Netflix shows often feature, for example, violence, sex, and unconventional topics like politics and social inequality. Netflix has invested over $1 billion in creating Korean original content, and they're planning 25 more Korean shows in 2022. Netflix strategy is really go local and go original, and they have doubled down their investment in other Asian countries, for example, Thailand and Taiwan and India, where they're creating a lot of local language shows. And they are also utilizing some of the universally popular content, for example, Korean content and Japanese anime. They have invested a lot in these two types of content as well because they have attracted a lot of viewers across Asia, no matter what culture and what country.
Bloomberg's Shirley Zhao reporting there. I want to stay on Netflix, which got a big boost thanks to Bill Ackman and his hedge fund Pershing Square purchasing more than 3 million shares of the streaming service. Ackman confirming via tweet that he is now among Netflix's top 20 shareholders. For more on what it could mean, I'm joined by Bloomberg's Lucas Shaw. Lucas, why do you think this investment from Ackman made such a difference to investors, and how much input will he actually have on what Reed Hastings and Ted Sarandos decide to do?
Well, it amounted to a big vote of confidence from a high-profile investor, someone who has a history of being something of an activist, although in recent years he hasn't been as much. And his letter made it pretty clear that he believes in the company, he believes in the streaming business model. And so after a week of Netflix shares just getting destroyed on the market, you saw them pop back up today, in large part because of the Ackman investment. As far as his role in the company, I don't sense he's going to have a ton of say. He is a top 20 investor. He's not a top 10, top 5. When I reached out to Netflix about it, it didn't seem like there'd been a lot of conversations between Ackman and leadership. But of course, that may change in the future.
Now, how does Netflix weather this subscriber bump in the road? And is Asia going to be the savior?
The message from the company and from everyone I've spoken with is, continue doing what we're doing. Yes, they issued a forecast for the current quarter that wasn't received very favorably, but they continue to believe in the long-term strategy. Netflix's leaders don't get swayed much by whether the stock price is going up or down. Maybe if this slowdown lasts for many months or the next couple of years, they'll start to change. But I think they're just going to keep trying to make shows that people want to watch and keep looking for customers. Asia is clearly the most important region for that. They're at close to saturation in the US. Their growth in Latin America has really slowed down. Over the past couple of years, it's been Europe, Middle East, and Africa, and then Asia Pacific that have been the real engines. And Asia is where they have the most room to grow. It's also where it's the most challenging. They've had a lot of success, as we just heard, in South Korea and to some extent in Japan. A lot of the markets left for them tend to be poorer and don't have the same local content industry. So I'll be very curious how Netflix does in a place like India, where they said they're very frustrated with their performance thus far.
Now, I got to ask you about this Spotify story. Delete Spotify now trending after this Neil Young, Joe Rogan debacle. Of course, Spotify electing to keep Joe Rogan on the platform. Neil Young going off the platform. How serious is this?
I have yet to see any evidence that this is a real problem for Spotify. Neil Young has a history of being something of an iconoclast. If you go back a couple of years, he took his music off of Spotify because he didn't think that the audio was high enough quality. He started his own music service called Pono that nobody really used. As long as he is the only person doing anything, Spotify's fine. If you see a bunch of artists line up behind him and express concern, then it becomes a real crisis. As far as the delete Spotify hashtag, I guess we'll see if there's any effect on numbers or in their forecast when Spotify reports earnings next week. But I haven't heard anything from people at the company to suggest that it's had a massive impact just yet.
Well, even before this, Spotify shares were in the process of taking a leg down over the last several sessions. Why is that?
I think there's a growing concern that their big bet on podcasting isn't going to pan out as well as people had hoped, or at least as quickly. Spotify spent all this money buying podcast studios on shows, and one of the reasons it's standing behind Rogan is because he is far and away the best deal that they made just from audience. He's their most popular show by leaps and bounds, whereas the studios that they bought haven't produced a lot of new hits. And it hasn't led to a material change in new customers, which is why you've seen the company change its strategy. I think when they first started in podcasting, they thought that it might bring in new subscribers. It also might help kind of make them more profitable because of how expensive music is. If you've noticed, now they're talking a lot about advertising, which is a different model.
Well, we'll be watching to see how this one plays out. Bloomberg's Lucas Shaw, thank you as always for your insights. Coming up tomorrow on Bloomberg Technology, it is an anniversary Robinhood does not want to remember. We'll speak with Soren Ondal of Blue Orca 1 year on from the GameStop drama. And that does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Stay tuned for more coverage of Apple and Robinhood coming up next on Bloomberg Television.